And when we talk about changing business models to fit the open banking era, what does that mean to you? What does the new banking landscape look like to you?
Well, it's changing a lot. It's not only that we, the incumbents, have to change our mindsets and learn about how to do things differently. We have a lot of challengers, and as Christoph said, they are not just the fintechs. Fintechs are doing a great job in not only Europe but around the world, revolutionizing a lot of things. But there are also the big techs. There are also other companies that are, other sectors that are very well positioned. Maybe they doesn't have the right mindset to do that right now, but they have all the tools to do that. So one thing that I question myself every night and then is how that landscape will be in 2, 3, 4, or 5 years.
And just to address that question that was put to Christoph by our delegates, is it all about the service? Because that seems to be where the conversation is now. It's about the customer.
It's about convenience. Banking is not sexy. It's not something. I guess that Christoph or Bernard told that. You don't wake up and say, "Oh, I want to do some banking." No, you do it because you have to. So it's a matter of reliability. It's a matter of convenience. It's a matter of something that happens in the right way when you need, where you need, and how you need it. If you can deliver that, you can have customers' trust and customers' market, customer confidence. So if you fail to deliver that, then it doesn't matter how much customers do you have or for how long, you are going to lose them.
And Josh, just to echo what you and amplify what you were saying earlier, that if you don't get that right, if you don't deliver the experience, the service that customers now expect, you lose them.
You do, but actually, I think one of the points we're making is that's now table stakes. It's actually not enough to simply give customers the must-have transactions. And this was the point around the propositions and where we're going. And actually, protecting customers is important. To give a really tangible example that all of us live with, when we looked at the money that we lose on payments to people using ACH or using an Apple Pay or something else, actually there's been a much bigger impact from regulatory change and interchange fees than there has on what customers are doing. And if you take what Apple Pay did of using the Visa MasterCard rails, what they're seeing is that the value to the customer of the fraud protection of the payments is probably worth a lot more. So I think we will, just as an example, we will get to a point which is really different, and it's sort of very different to banking, where we will make it clear to customers that if you pay using your Visa, MasterCard, credit card, you get these certain protections which you don't in others. And I'm not saying it to be clever, I'm saying it because actually it's a real reality. That if you listen in our contact center to people to use one very well-known US-based payments mechanism where we don't get the data of what the payment is, it's a very painful experience for the customer when it goes wrong because the data isn't there. So I think we're going to come back to this experience. What I'm really getting at is the experience isn't as simple as the analogy here is the insurance company. You want an insurance company that when it goes wrong, will they do the claims? We're going to get a lot more of those type of examples in banking as well.
Yes, I think I agree, so I won't repeat it, just to save time of everyone. But I think maybe one more point is the challenge, and what you mentioned on regulatory. I think this is absolutely amazing what has changed over the last 10 years. And the impact, I think, is much bigger because customers do not always understand what we have to do as banks, and which is also preventing their interaction in a smooth way, while other operators might not be subject to the same regulation. So I think getting into a level playing field into this area is certainly something which would benefit everyone, in the sector, right? From fintechs, banks, everyone. Just that we get one set of rules which is clear to everyone, and then everyone can play with the same set of rules. So I think that would be also certainly helping a lot.
Yeah, I mean, totally agree. We are now not playing in a playing level field. We are not playing with the same rules. But we as banks have to understand that. we are not the only industry that is not playing with the same rules that the challengers. This is a problem, and also this is a strength. You have to make some things differently, you have to innovate, you have to cooperate with those challengers, you have to co-create with those challengers, you have to compete with those challengers. You have to learn what are your strengths, what are those things that you have to do well, the traditional things, the common things. And what are all other things that you have to improve, that you have to create, that you have to innovate, or that you have to say, no, I'm not good enough to be playing in that field. I have to rely on somebody else. I have to give up. It depends of any characteristic of any bank. Any bank is different. In our case, we are trying to do so. And the strategy is not exactly the same in every single market. It's not the same the position that we have, for instance, in Mexico, or in Spain, the US, or in Paraguay. It's very different. So we have to compete, and we have to work in every single of these markets in a very different way, but with the same mindset. How I can deliver better experiences, better things to my customers. Not only in my platforms, not only in my website or my mobile app, that's a given, in their daily lives, wherever they need it. So what open banking allows you, the open platforms allows you, is to do that, to create partnerships with third parties, to bring new possibilities, new amazing things to their customers there when they want to do it.
Mm-hmm. Just to go back a step, are you saying banks are held to a higher standard?
Yes.
Well,
I think, I don't know whether it should be at a high standard. I think I know whether it's higher or not, but I think it is certainly under a very close scrutiny, just put it this way. And I think we also, as banks, make our lives also more complicated by ourselves, right? So I think we can't always blame the regulator by saying, well, I think it's also because also internally we're more scared than we were like 10 years ago. So I think we're building those kind of defense systems internally. So I think it's not about only the regulator. I think it's also an appetite of risk. And I think we have a great sense of responsibility to our role in society, into the economic environment. So I think we've seen this, right? And frankly, I don't want to sound very old, but I think if you look back, people who are less than 35 might not have go through a crisis as we were going through, right? So it also brings some, I think, some perspective into who understands what and sees where we're going. I think we do not fear maybe the same things, right? And I think this is where the difference can be, but also in terms of regulation. But I think if you look at PSD2, I think how many banks have been just fighting a lot against this to come, right? And lobbying very intensively, while you can also put it a different way and say, why, if this is a principle the EU wants to impose to everyone, that you are the owner of your own data, right? Why would this be applying also to anyone, right? To Google, to Sainsbury's, to whoever, because why can't we then also get those data? And I think this is using what could have been looked at as a threat, but as an opportunity, I think, because we have a lot of data. I think, frankly, as banks, we have built enormous knowledge about how to use this data. I think the model we are in is just using information to transform it, right? So data models, this is something which we have in our genes, so it's more a strength. So yeah, coming back to your point, I think it's a strength also for us just to make sure that we use everything which is outside, not seeing it always as a threat. I think, yes, it's difficult, but
just to build it, because I think this is at risk of sounding like we're in the banks and these are lots of reasons why it's complicated to defend. Let's do it from the other side. Yep. If you were a challenger bank, you're a fintech business, and lots of us have done this in other industries, it's way more complicated. There are actually diseconomies to adding extra features if you're a fintech rather than economist. So if you go back to most other sectors, once you'd established yourself with some customers, it was quite quick and easy to add extra services. What we're finding, and I'm sure some people in the room, is it's the opposite here, because as you add a service, you suddenly either trip over a regulator, and it could be a regulator from a different country because you've raised the issue, or you suddenly get into a competition area, or part of what's happened is various regulators have done their own risk management, and they said, well, I'm only going to worry about this at a level of scale, and therefore if I get to that. So the problem isn't, I don't think this is a bank problem. I think it's actually an industry factor, and I would actually even argue it's not because regulation is bad. Again, this is the point I was trying to make at the end. It's because this industry is inherently unstable and different. There's a reason why hundreds of years there have been regulations on here. It is an inherently unstable area if you don't have that level of government support.
Because the argument is that there is a difference between the banks and Google in that the data that you have on customers is much more valuable, much more personal. You're doing more than just keeping a record of what websites they look at.
Yeah, I think maybe those are complementary informations. I think this is why they also very actively get into this PSD2 possibility for them.
But has this created a culture where there's too much concern about risk management, about compliance?
No, so I'm going to come back. The point I'm trying to get to is if you see what I think doesn't work, and it actually doesn't matter, again, if you're a banker, you're a fintech, or a challenger bank, putting simply a team that says, I get the customer and I do the customer problems, and then I've got some smart tech people, and then I surround it with governance, I think is not a very efficient way of solving this problem, because you'll both create the internal pressure between the teams, and you go around to that, and that doesn't actually matter, again, if you're a banker, you're a fintech, with putting extra governance in. What I think you need to do is to understand the spirit of what the risk management or governance there. It's there for good reasons. Again, people will make, unfortunately, in the moment, we know this from behavioral economics, they don't always make decisions that are good for themselves. We all know that, sadly, despite lots of good advice, there are people who, some of the segments, who really should know better, fall for phishing attacks. I mean, there's lots of parts of society where it's understandable and it's very sophisticated, but there are people just from convenience, I'll do this, and if it's wrong, someone else will pick up the tab. And we need to build that spirit of that into the requirements up front, and then use the really smart technology and data. So a really obvious example that works, biometrics done well, with the addition of all the transactional behavior stuff, is a great win-win. It's actually a better security solution. It's better for the customer. There are quite a lot of machine learning applications that we're looking at now that do that. For example, we give people overdraft alerts in real time. We sent 26 million overdraft alerts out last year in the UK alone, and over half of those people avoided fees because they responded to them in a way that was now easy, and they avoided it. So there are lots of win-wins in there. We just need to keep finding them.
Okay, we invited people to ask their questions, and we're getting lots and lots of questions coming in. So let me ask you to address some of these. All presenters have focused on the positives of big data and personalization. What do you see as the negatives or perceived negatives of big data and personalization?
Well, there is always the matter of how do you regulate the use of that data? How do you share the data? How do you protect the individual? The problem with big data is not the big data itself. It's the small data. It's the individual data. And also that you don't have all the information from all the industries at the same time. You can use it in a very specific way. You can prove whatever you want with enough data. So I guess that the main concerns with regulators should be how do you keep safe the individual? How do you allow everybody to say, hey, this is my data. I don't care if it's from a utility, from a bank, from Google, from whatever. I want this data here, or I want this data in no place. It's a personal decision, and we should be allowed to do that in a safe and secure way, and also transport that data to whatever we want in a very secure way.
So the issue is the complexity of this, of having variability within established structures to allow for that extreme
the complexity, and also that is not regulated in the same way.
Yeah.
If I want to know how I spend in utilities, how are my phone calls, where I can afford that data. I can tell some nice fintech that has tremendous tremendous job with data. Hey, please analyze this data for me because I want you to give me a better offer of, no, I can't. I can't do it with banks.
One for Benoit. What do you think is the disadvantage or the advantage of having separate innovation teams versus having product managers work out innovative propositions? A silo of innovation, is it helpful or not?
We can spend a whole day on this.
Take a minute.
But thank you. So we see is a different. I think I'm not saying one is better than the other. I think some topics can better be addressed by having it outside when you're looking at long-term disruptive innovations which are taking more time and a bit far away from the existing business. I think you'd better take them out and not too far, because otherwise you don't get the power of the bank and the knowledge of the bank. But when it's daily innovation, improving things like what we call H1, so short-term innovations, then I think it's better to have them embedded in the team. So we're trying to do both. And I think it's eventually an art to go, sometimes far away, sometimes very close to the organization, depending on the topics. So there is no, one place which is better. It depends on the problem which we are solving.
And when you look at how you arrange your teams and how you align them, do you, just looking at the second question here, do you align them around products or around journeys? What's the correct cultural approach?
Again, I think it's hard to say correct, but the way we're doing this is that around topics like housing, shopping, whatever, trade, because you want to build this into an ecosystem and into a platform play where the platform business model is also feeding itself in different ways. So just looking the old siloed way, I'm doing mortgages, that doesn't really help. So this is how we do it.
On this question of silos and how you encourage innovation and nurture innovation, there will be, this is the second question on this screen here, there will be some teams that want to develop innovative new products themselves. There will be others that will say, actually, we need to bring in some expertise from outside. We need partnerships. We need a broader ecosystem to do this. When do you judge which is the correct approach, to keep it in-house or to have a more open, collaborative approach?
I love this question. I really do. I love this question. I spend it internally because I have a very, rightly or wrongly, I have a very strong point of view on it.
Did you type this in yourself?
I shouldn't. I just it's the new telepathy system. So I often say one of the big things that we are doing, but lots of banks are doing, is moving from what I call project management to product management. As in, project management says you have some executive decision that agrees a particular goal, and you've got your definition of success, and you put your team there, and you get your project done, and then it's sort of finished, and you will move on to the other one. Yeah. And it's just not how I think this needs to happen. The point about product management is you have a sense, and whether you are organised by a journey or area, but you have your ongoing roadmap. You have your deliverable you want to get done, but you have an ongoing roadmap of where you think you want to get to. So if I take, and I'll give you two very tangible organisational aspects to this. So one, when I was at Google, acquisitions at Google happened, exactly to your point, Declan, because you would have a roadmap where you wanted to get to, and you realise, actually, I can get to that point much quicker if I buy this expertise or this capability versus buying it in. And so you want to have a series of roadmaps, not because you're always committed to get to that point, because you're saying, where do these different areas go into the future? And often you might have two roadmaps that link up. Sometimes, actually, they will contradict at some point in the future. And then to get really slightly pedantic about it, but when I joined HSBC, our tech team didn't really know what solution architects were, because we had enterprise architecture, and we generally had an organization built out of big applications. And so the idea that you have, and the heart of what solution architects do, I think, in technology, is actually making the choice to say, to get this done, do I build on some existing service we have? Do I start something new? Do I work with a third party? I mean, that's that whole heart, and it's delegated down into these teams. So that choice and that conversation you're raising is now an everyday part of the business, whereas previously it would have sat at some sort of architectural advisory board or something there, and it's now just part of everyday business.
A very practical question. Will open banking lead to the end of card-based payments? And if so, how does that affect bank revenue models?
Well, it will affect it a lot. I mean, invisible payments will become more and more frequently. you don't want to be aware of bringing your card or whatsoever, but sometimes you need some physical things to do some things, because not always you are connected, not always things work in the right way. But I get that the prominence that the physical card has now is going to be lost, because you don't want to use it in that way. You don't want to remember the numbers. You don't want to carry something with you. I use my phone to pay everything when I can. When I cannot, I bring my card.
But it depends, doesn't it, what is behind the use of the phone. Is it simply the phone is just a surrogate card,
when I say that, I just don't mean the card itself as a physical, but also the rails behind it. You know that payments is a very, very old technology behind that. We have a lot of rails built, Swift, Visa, MasterCard, name one. But there are a lot of new rails building right now. And some of them are faster, are cheaper, and they are just not wide used. That's going to change.
Yes, I wouldn't worry too much in the short term, because in the coming 5 years or whatever, I think we still have those cards. I think we had the same story about cash, but I think it's going to take a long time. Yet you need to invest today in alternative ways and in alternative infrastructure, because it takes 10, 15, whatever years to get those new systems in place.
Yeah, how big a shadow in the background is Apple or Amazon or Google or the big tech giants?
So we talk to them, and we talk in China a lot. I think it's, I feel much more confident about the opportunity for financial services being a separate business, actually because of their behaviour. So I'll give you a couple of, again, very tangible examples. These are all in the last few months. One is with more than one of the very large West Coast companies. We've had a conversation recently where they've looked actually at payments, and they have all in horror, because they're looking at the issues of fraud protection. What if I have a transaction monitoring that refused to receive the money from the other side? Yep. The customer queries. To be honest, I messed up myself this weekend, where I'd made a payment, I thought, to someone I was paying, and actually what happened is instead of that, I put in the bank details of their supplier, because they'd include their supplier's invoice as part of what was being paid. I have to go and investigate that. We will get it fixed very easily, but you need processes and cost to do it. Luckily, it wasn't fraudulent.
I would imagine it would get fixed faster for you than for...
No, actually it won't. It will get this, because actually the supplier to the company was actually a major supplier for them, so it will get supplied to them, not because of me. But the point is, the data, so if you look at those West Coast, what they've realised is the operating processes and exception management is actually a much bigger deal than the tech itself. And then the second piece is what I said before. Even if you're Ali and you've got a whole bunch of customers' deposits because you think you can give them a return, does Alibaba really want to be accountable for whether that becomes people's wealth and their pensions and the impact of Chinese regulation? I don't think so. So I think it's, I'm not saying that, I'm not actually making the point here that the legacy quote-unquote banks will win. What I'm saying is this is very, very different to managing general consumer tech businesses.
Let's cut to the chase. Question number 4 on that list. When is open banking actually going to make some money? When is it actually going to improve the bottom line?
I think it's again in a long time. I think, and if you go back to about 20 years ago when we had the same question about internet, they said, oh yeah, we should do internet banking. And then people were asking for a business case. They said, oh, what is a business case? Yeah. I think at one point it's just another channel. I think this is a way we are doing business which will be different. But I think I'm not sure it's worth looking at open banking as an individual part of something which is somehow making money or not. I think it's just the way we do banking. This is part of it, and I think we just add it on as an additional cost, and then we'll need to digest those costs.
Okay, thank you.
I guess that the question itself is not right. I mean, every single time I talk in open banking, people ask me, how do you monetize it? You monetize the business. Open banking is an enabler. So you need to build revenue lines. You need to build business models. And those business models should be good ones. But APIs, open banking are just means, are just enablers to do so. So if you make a partnership, so somebody else brings you new customers, then those new customers are going to be the monetizing thing. If you are distributing your loans through third parties because you are enabling themselves to sell in a better way, in a cheaper way, well, then those loans are part of and you are maybe paying for that. But maybe that is the business. You are not monetizing open banking itself unless you are in a banking as a service industry and you say, okay, this is my bank, my license. Please come to the cashier. I'm going to, guys, if that's not your business model, if you are a bank and want to continue to be a bank, so focus on the business.
Okay, thank you. Quick word.
Well, very quickly. I mean, I totally agree. That we had as First Direct, as part of the First Direct service, we had a relationship with Yodlee 10 years ago, which was account aggregation. It wasn't the payment side, and actually that people would use it. We had to turn it off because to make access to that, you had to put in your original password for another bank. That's breaking their terms and conditions. So we actually had to turn it off. There's a whole bunch of internal banking use cases, which we are delighted about open banking around because it's allowing us to frankly turn back on some services. Again, from a regulatory point of view, we had to turn off. And so I don't think there's anything here that suddenly says it's pro or anti a particular organization. What it will do is it will help the customers. I mean, that's there.
Thank you very much. Thank you all for your questions. Please join me in thanking our panel, Ricardo, Josh and Benoit. Thank you very much.
Thank you.